बीएसएनएल, एमटीएनएल को बर्बाद करने वाले कौन थे? वो कौन सा कालखंड था जब बीएसएनएल, एमटीएनएल बर्बाद हो चुके? जरा याद कीजिए, एचएएल उसकी दुर्दशा क्या करके रखी थी, बर्बादी। जिस बीएसएनएल को आपने तबाह करके छोड़ा था ना, वो बीएसएनएल आज मेड इन इंडिया 4G, 5G उस तरफ आगे बढ़ रहा है और दुनिया का ध्यान आकर्षित कर रहा है। 2014 में देश में 234 PSUs थे, 234 2000 उनके यूपीए के 10 साल के कालखंड में। अब 14 में जब उन्होंने छोड़ा 234 आज 254 है। 234 थे, आज 254 है। इन लोगों की मर्यादा इतनी है, अब इन्होंने अपने युवराज को एक स्टार्टअप बना करके दिया है। अभी वो नॉन स्टार्टर है। न तो वो लिफ्ट हो रहा है, न वो लॉन्च हो रहा है।
Okay, those are some comments coming in from none other than the Prime Minister Narendra Modi in the Lok Sabha, talking about the people's confidence improving in PSU shares. Hi everyone, good morning. You're tuned into the market right here on ET Now with me, Avanne. Dubash. Got Nikunj, Dalmia, Anisha, Jain as well right here. And Nikunj, I think really the proof is in the pudding. The net worth of a lot of these PSU companies now at 17 lakh crores against what we saw in the year 2014, 9.5 lakh crores.
Look, I mean, if you frankly ask me, PSU really has been the success story. PSU has been the success story in terms of what markets can do, what good governance can do, what government efforts can do, and what was the ability and what was the value in some of these stocks. What was called as the real ugly duckling of the stock market today has become the darling. PSU stocks were the favorite whipping boy. 2010 to 2020 was like a lost decade, from PSU banks to power companies to fertilizer stocks. Nobody cared about them. And today they really are the ones where action, where excitement, where, things are moving in the right direction, both in terms of earning, dividend payout, and what they're contributing back. Look, banks coming back, economy will do back. Defense doing well, that's great news in terms of the general the general modernization of Indian Army and what it really does to the entire defense sector per se. Power sector coming back, well, the power problems in a sense will be taken care of. So, I mean, what a remarkable turnaround it's been. While PSU stocks, we may argue about the price levels where they are, we may argue about the recent run-up in railway stocks and some of the other stocks, but yes, in terms of a theme, in terms of what the positioning is, in terms of where PSU stocks were versus where they are, I think they are the leader, and I think select PSU stocks will continue to remain leader, I think, for a long, long time.
Well, yes, PSU stocks have been leading for the last 1 year, and yesterday was no different. Yesterday as well, in that last hour, we saw a massive surge on a lot of these PSU names, especially the PSU banking names. So whether it was an IOB, a central bank, a Bank of Maharashtra, all of these stocks were locked in upper circuit. And don't forget the heavyweight SBI. That showed a solid surge of around 4% yesterday, and in fact, it was the biggest contributor at the index level in terms of points. But despite all that performance coming in from PSU banking names, we failed to hold on to that 22,000 mark on the Nifty. We did see a bit of a tumble of almost 100-120 points from the top of the day, and that has been the trend in the market, that there has been the sell-on rally that has really fructified for the last week or so. Nifty Bank was also 200 points off the highest point of the trading session. IT was on the weaker side yesterday, call it the rub-off impact of Cognizant. But that was something that we were watching out for. And India VIX also marginally cooled ahead of that big event which is lined up, of course, the RBI Monetary Policy Committee meeting. We'll talk a bit more about that. And of course, today is the day when there's weekly Nifty expiry as well. So that too will play on minds of the traders as well. But Nikunj, this PSU rally, of course, apart, the market is failing to hold on to gains. There is this, sell-on rally that keeps on happening.
if you're a bull, you will say that, look, I'm buying on bad days and it's working. So, in this kind of a market where you know that the directional move, like in Jan was down, I think the directional move in the month of Feb, I think is up. Which means you buy on a bad day, you sell on a good day. It's very simple, ulta karo. Just think about it, right? On a good day, sell. On a bad day, buy. Just go against the market if you're looking at near-term move. Because if you're buying on a decline, you're getting rewarded. You're selling on a good day where markets have rallied for 2 or 3 days, you're actually also getting rewarded. So markets are frankly looking for a direction and they're looking for that pace. That pace is either going to come from banks or it has to come from some heavyweights. I think Reliance has done its bit. Large cap banks are not going anywhere. Large part of the heavy lifting has to be done with PSUs also. It has to be done by PSU banks. So the market is looking for a direction, the market is looking for a pace. In the month of Feb, bulk of the news flow is behind us. So market action would be a function of what really happens to, let's say, in terms of the momentum and how essentially the flows would move. So it's a market where more than news, I think it's the momentum and it's the liquidity and technicals which really would be at play. And that kind of a setup, since we don't have any large big pockets of activity, at least in the Nifty 50, I guess you'll have to really trade shallow, trade opposite to the market. And the bias, I think, really is positive for the month of Feb. Unlike Jan, where it was absolutely clear that Jan is not going to be a great one, I think February, I expect that the biasness for the market really is going to be more bullish than bearish.
Yep, you can see that sort of tide turning. That's what's being reflected in the early days of the month of February. Well, it's 8th of Feb and you've got the RBI monetary policy outcome that's going to take place today. This is the first one, by the way, that's after the union budget. And we're seeing, the overall scenario right now where inflation is showing a little bit of signs of easing. And it seems like that's the consensus. 100% of the people that were polled and economists are looking at a maintaining of the repo rate. And I think the outlook and, Nikunj, where everyone will be reined in on will be whether or not the policy stance will be retained as withdrawal from accommodation.
See, this time there is a hint which has come from the finance minister. She said the inflation is under control.
Yeah.
And that's a very big statement coming from the finance minister. Now, of course, Reserve Bank of India and the MPC will have their independent view. But given the fact that rates, in a sense, I mean, the whole inflation concern now seems to be getting diluted. I expect some constructive talk on that. Then on the rate action, I think everybody knows that they are likely to maintain repo rate and they are not likely to change their stance. Withdrawal of stance to neutral could happen. That is a minority view. Third, you really want to understand their view on liquidity. I think for me that is the most important aspect because Reserve Bank of India has successfully mopped out a lot of liquidity without hurting the interest rate trajectory. Now, if that is the underlying factor which is at play, so if Reserve Bank of India looking back at liquidity coming back, and Anisha, mark my words, what is the challenge for the banking sector? Liquidity. Liquidity is having impact on liability, that is having impact on credit growth, and I'm sure somewhere Reserve Bank of India is well aware of that. So what is the view on liquidity? Then I think it is not MPC, but it really could be a Paytm press conference.
Absolutely.
I mean, I'm
That's
sure that is the biggest talking point. I mean, I don't know how much they would be able to address a company-specific concern, but I think that in a sense would really be the central theme of what have they done and will they get a second chance, and is this something which Reserve Bank of India would be seriously looking at this entire fintech and the payment gateway. So it's more of a indication on RBI, on fintech and less on MPC, and I think that in a sense is likely to occupy a lot of center stage. So MPC side mein rakho, this is something which is of importance. So liquidity, no rate in change in stance, and perhaps some more clarification on Paytm specific and fintech in general.
Yeah, no, I completely agree with you. I think the focus will entirely be, at least of the street, in terms of what they have to say about Paytm. What were the lapses and why these actions were taken in the first place, and what's the way forward? Are those rumors and speculations which are doing around regarding cancellation perhaps of the license as well as something on the table, or there are remedial actions that are going to take place after the meeting that Vijay Shekhar Sharma has had with the finance minister as well as the RBI officials? So that is the something that you need to keenly watch out for from the RBI monetary policy meeting as well as the press conference later at 12. We of course have the special coverage with a slew of guests lined up just for that. But back to the markets, and of course it's been about earnings as well. So in terms of earnings, overall it has been a good show on the overnight basis. Stocks like Tata Consumers, Power Grid have reported a largely in line to a decent set of numbers. What really stood out was the likes of Lupin as well as Cummins. The domestic sales have bounced back very sharply. The gross margins have improved. Kalpataru Projects as well as Star Cement, Jamna Auto, and even Supriya Life for that matter, for third straight quarter, that company has been reporting good numbers. On the losing side, however, what is expected to be under pressure is Sobha as well as JK Paper. For Sobha, the profitability eroded by as much as 52%. JK Paper also hints at the fact that perhaps the best is over. So just watching out for some of these earnings. Of course, we'll discuss the likes of Lupin, etc. in more detail. But Nikunj, of course, it's the fag end of earnings, and there was this worry that consumption has been the weak link because the likes of HUL, etc. disappointed a bit. But when you look at numbers from, let's say, a V-Mart and a couple of others like Trent yesterday, doesn't really point to a structural slowdown per se.
See, we must realize that the entire consumption space is really getting divided. You got ultra luxury where there is no problem whatsoever. It's a boom time there. Then you come to semi-urban and urban. Within that, specific categories are not really seeing what could be called as stress. And then you come to rural. Within rural, we can endlessly argue about, okay, FMCG not doing well, or two-wheelers, going through a gut-wrenching fall, so to speak. But are those the traditional indicators which we are looking at? Because if one really looks at what's happening to rural economy in terms of land prices, what's happening to things in terms of how the productivity gains have kicked in, I think the news from rural India is not that bad. Otherwise, you would have not got this kind of a number from a V-Mart or let's say from a D-Mart in terms of growth. I think the entire space per se in the consumption space is changing. Sure enough, there is a challenge and there is a compression which is clearly there in FMCG sales. But on the margin front, I think things are looking up for them. So for FMCG stocks, I think we could really be nearing that turn now, that if we get a little bit of time correction, little bit of booster which could come in the run up to the election for the rural economy per se, now that margins have stabilized and inflation is behind us, there could be mild outperformance which will start in some of the FMCG stocks. But I think the consumption space really needs to be looked at very differently. What within consumption is up, what within consumption is down. Which are the categories which are doing well, which are the categories which are not doing well. I mean, I look at Zomato sales, they are still selling. I mean, it is, and they're expanding. So you're eating food, but you're not buying soap and shampoo. I just find it difficult. So I think that is categories which are important and companies which are important. So you just cannot, earlier it used to be, okay, two-wheeler and HUL sales, that what is happening to India. That is not the real deal now.
Yeah, the correlation seems to be missing a bit in that sense. And talking about Zomato, earnings are expected today, so we'll watch out for what happens there. And then other companies like LIC, Grasim, etc. will also be reporting numbers.
Absolutely. We'll be closely watching out for that. Busy day. By the way, just a quick roundup of what happened across the globe. You did see a pretty strong handover coming in from Wall Street. All the three major indices were in the green. It was an all-time record high for the S&P 500. The Dow Jones an all-time high. The Nasdaq as well jumped about 1%. And this morning, Asia is piggybacking on those cues as well. But let's find out what's in store for our markets and in terms of levels that we're tracking. Naresh Mirani joining in. Hi there, Naresh. Good morning. Let's get in your take then. 21,930, that's where we wrapped up in trade today. What are the kind of cues that you're getting or levels that you're tracking, given that 22K seems to be a little bit of a level that we're not conquering with conviction?
So we've not been crossing the Nifty levels, but the Nifty 500 has hit a new all-time high. You have a new all-time high on the mid-cap and the small-cap indices. Globally, we've seen new all-time highs for S&P 500, Dow Jones, and various indices across the world are hitting new all-time highs. So it's just, we just need a little bit of a fillip from one of the heavyweights apart from Reliance, and we should be there. So overall, the stocks which are hitting new all-time highs on the Nifty are the ones which have lower weight. So SBI hitting a new all-time high does not have the same impact like a move which can happen from a HDFC Bank or an ICICI Bank. We've seen new all-time highs come consecutively for the whole auto pack, the pharma pack. So this whole pack which has been doing well are relatively lower weights. You have banking and financials and then IT, which take up almost 50% of the index weights. And we are not seeing much of a bump up there. But overall, the bias is positive and we just need one tick from any of the heavyweights and we could be crossing 22,100, 200. So it remains a hold on the index, a ride on to the move, and continue to focus on the broader markets. But if we cross 22,200, then we may see some more momentum come in the large caps.
It's a hold at the index level, but of course, it's a broader market which has been doing better. But Naresh, let's talk about those broader market ideas. What are the top bets that you are recommending this morning?
So again, the two names from the Nifty, but which are hitting new all-time highs and have finally taken leadership. So first is the Avanne Maruti. Continue to like the stock from that base of 10,000 over the last 4 or 5 sessions. It has clearly moved up, shown a lot of relative strength with the index, and now setting up a move to new all-time highs. And mind you, the stock was at 10,000 back in 2017-18, and then couple of times in the last 3-4 years where it has tested that. So it's a multi-year breakout, very similar to what happened in a Bajaj Auto or a Hero MotoCorp. When they started crossing, we've seen the outperformance. So this could be a stock which could get into a slow and steady outperformance like the other names in the auto pack. So an initial target price of 11,800 now, stop loss revised to 10,600. Second is a buy on State Bank of India. Multiple attempts done around that 660, 670 mark. And also 620, 630 now, which should become a base going forward. And yesterday we saw a new all-time high over there. So a clean breakout here as well. This could be looking at a move towards 720 in the short term, stop loss at 660.
Thanks very much, Naresh, for flagging all of those details off and your top ideas. Let's move on stock-specific calls, and Sumit's here in the studios to discuss that. And let's talk about Lupin, because it's been the 5th consecutive quarter that we've seen a beat.
Well, yes, very strong set of numbers that Lupin has reported. In fact, analysts are now saying that there could be EPS upgrades coming in for Lupin post the call today, that is at 4 p.m. Now, EBITDA has beaten consensus estimate by around 19%, while the Q3 has reported its highest ever sales and EBITDA margin, which stood at close to 19.7%. Now, both India and US business reported strong set of numbers. India grew double-digit on a YY basis, while US sales were flat on a sequential basis, but flat is still better because analysts were expecting a decline to come in the third quarter of FY24. Now, the numbers were flat at around 212 million, and analysts believe that strong Spiriva and a base business might have aided the performance. Also, US business could have been benefited because of the flu season that we had seen in the third quarter of FY24. Apart from that, the company has also repaid a debt of close to 800 crore rupees in the third quarter. Now, the company will be holding its conference call today at 4 p.m. and Street would be wanting some details on firstly on the tax rate going forward, given that in Q3 this number has come in on the lower side. So if it continues to remain lower, definitely there would be some EPS upgrades going forward. Apart from that, the US sales sustainability is one of the key questions that the Street would want to know. How sustainable is this number at around 210 to 212 million US dollars? Apart from that, the gross margin of Lupin has expanded continuously for the last 5 to 6 quarters, and how sustainable is this gross margin rate going forward is something that the Street would want to know. And lastly, how much of this price erosion has eased in the US market is something that the Street would want to know from Lupin call today.
It's not, it's another beat actually. I mean, just think about it, that has a cycle turn for Lupin. See, you have to realize that for pharma, it's a cycle which really matters. I think the third quarter where Lupin has managed to beat estimates, and now that things are really looking up in terms of a product profile and in terms of the blockbuster drugs they have, in the near term, even though the run-up in Lupin has been very strong, given that the cycle, I think, for next 2 or 3 quarters is looking strong for Lupin. It is not a wildly expensive stock. And at the peak of the cycle, Samit, I've always seen that Lupin tends to beat the estimates. In the downturn of a cycle, it will always disappoint even on the most bearish consensus. That's how Lupin and that's how pharma actually moves. So I think we are in for earnings upgrade. And typically when an earnings upgrade, which also coincides with P expansion, the stock is not very widely owned also. There was a time when Lupin Ghar Ghar Ki Kahani thi. I think that's no longer the story. I think there is scope for more institutional buying, more institutional upgrades, and I think there is a reason to remain optimistic on Lupin at least for next 2 or 3 quarters in terms of sheer outperformance.
Yeah, sure outperformance, and overall, by and large, pharma numbers have been better than expectations in the quarter gone by. But talking about beat and talking about P expansion, not sure if that's on the cards for Trent further, because it's already and always been trading at very high valuations, and yesterday that 20% move was something which was stellar. And I love the headline which is there, Somit, on Jeffrey's note, we got this wrong, and terribly wrong clearly.
Yes, many of them got it wrong, I guess. But still, despite the fact that the P valuations are at all-time high for Trent and higher than its peers, there are target prices that have come in on the street that are more than 4,200 rupees for trend now. Now, yesterday the move that we saw of around 19.4% intraday move. In fact, on closing basis also, if you see, it was the biggest gain that Trent has reported at least since November 2004 that we know. Now, some of this rally, after speaking to many multiple experts, we understand that could be because of short covering also, but the numbers were very strong for Trent in the third quarter. Revenues were up around 53% on a YY basis, and the CAGR for 4 years at around 40% revenue CAGR that the company has reported. Now, the revenue growth is purely on the back of store additions. The company has added nearly 50 Zudio stores, but despite this aggressive store expansion, the company's EBITDA margin came in higher at around 19 odd percent that we have seen. Also, gross margin expanded by around 60 basis points to around 46 odd percent. Now, because of this expensive valuations and given the fact that the stock was up around 20 odd percent in trade yesterday, the street is now divided. There are few analysts who have a target price of more than 4,200 rupees on the company, but there are few like Jefferies and Morgan Stanley who believe that the best is done for Trent and everything is priced in at the current market price. So, Nikunj, what is your view here?
You know, I'm a big admirer of what franchise they've created, and you got to realize that why are they growing when others are struggling? At a time when we're talking about slowdown, at a time when a company like DMart, which is like real value retail, what is that Trent or Zudio doing in this case? I think they've got the model right. And when I speak to Mr. Karmarkar, I mean, he's like the granddad who's invested in the stock. He just tells you that, look, their positioning and their supply chain, I think, is very, very unique. So they've really managed to be a trendsetter in terms of understanding the wallet share and also the market share of an Indian consumer. Also, there is a Star Bazaar. And that Star Bazaar uptick, I think, is there, which a lot of market men are not realizing. Now, it's a Tata Group company. The market cap has gone to 1 lakh crore. The rise really has been linear, and I agree with Sumit that yesterday's price action was not so about numbers. It was like this bout of short covering which happened in a rather illiquid FNO name, and when everyone is caught with their pants down, the stock will actually spike by 18-19%. The point you could ask yourself with Trend is what is next now. So if you own the stock, don't sell. If you want to buy, well, you have to buy it when there is decline in the market, because I can tell you that this is a business which is built to last business, and both in terms of the push and in terms of what the management is trying to do, I think it's here to stay. And valuations, you know, Sumit, folks, please realize that in a bull market, it's always difficult to say that, you know, what is the right P and what is the wrong P. My understanding is that if you look at the Indus ACE accounting standard, the P multiple is very, very different, and that is what you need to look at. But yeah, you're right. I think yesterday's 18% price action cannot be justified by the numbers. It's a FNO stock. Everyone thought the numbers would have a base effect, and it's an illiquid FNO stock. Right. So it had all the ingredients of making that if everyone is on the same side of the boat, and if there is a bout of short covering, then the bears yesterday were running literally with the tail between their legs. So tail between the leg phenomenon led to a 20% spike in spread.
Okay, and that's the numbers as well playing out, with brokerages acknowledging as well their view that is coming in on Trent. Let's get a move on then and get in Kunal. By the way, we didn't get in his top trading recommendations, so let's find out what he's picking out for the day. Kunal, what's looking good on the charts?
Good morning. Yeah, and the two recommendations which I am suggesting at current levels. First is Avanne Asian Paints. The stock is actually trading at its multi-week lows, currently at sub 3,000 levels. But interestingly, the stock is also on the verge of a major bottom formation for itself. The indicators have seemingly coming back into an oversold territory for Asian Paints. So I would suggest a buy with a target of 3,200. Stop loss could be kept at 2850. And AB Capital is something which I've been recommending over the last few weeks. The stock has done reasonably well from sub 170 levels to at a point when the stock is above 185 plus mark. So would reiterate a buy on AB Capital. Target remains the same at 200. Stop loss straight to 180.
All right, there you have it. Kunal flagging off some of his top recommendations. Tell you what, we'll take a quick break, and as we do that, get ready for a power-packed lineup for the 8th Global Business Summit that takes place tomorrow and Saturday. That's the 9th and 10th of February. There's going to be more than 2,000 delegates representing diverse industries and sectors from across 20 countries that will be attending the biggest business conclave in the national capital. And that's not all. None other than Prime Minister Narendra Modi will be preparing to set a vision statement as he speaks ahead as well. We've also got disruption, development, and diversification at the center of it all. So don't forget to catch that all-round coverage only on ET Now.
Welcome back. Well, we have Sanjeev Bhasin joining us on the show. So let's start with Trent itself. Mr. Bhasin, what a solid run we saw on Trent yesterday, that 20% up move. Do you think it was warranted? And what should fresh investors do? Still look at buying this very, very expensive stock?
Yeah, good morning, Anisha. Well, you know, quality will always have its time in the sun. And for years, Trent was a non-performer despite being from one of the biggest groups ever. The Tata Group market cap has crossed 30 lakh crore. And that is telling you that some of the underperformers are now performing. But what a performance, in the sense, numbers stood out. And, you know, now expensive can get more expensive. But I think beauty will lie in the eyes of the beholder. If you are in quality, stay there and watch for declines. But it's telling you that the change of trend from unorganized to organized is very much on the anvil. The Kirana store, the jewelry store, the anything to do with protein, cheese. I will suggest one more name, which is going to be a multi-bagger, which I think is on the same thing. So stay with trend, look for declines, but add it to your portfolio.
Okay, there you have it. That's on Trent. And then, Sanjeev, were you impressed by what Lupin delivered 5th consecutive quarter, that it has been a beat, and pretty much on all parameters, it's been A-okay?
Yes, good morning, Avanne. Definitely, Lupin has been one of our top picks from that 700, 750. We thought all bad news was in the price, and lo and behold, after almost 12 quarters of underperforming, but now they've come out with deliverance. See, in the generic market, they have a huge market share, and I think now that now that the numbers are starting to come, I think all the quarters of pain are behind. So they invested in their molecules, in their R&D, but the results are here. I still think this stock has more steam, and it's one of our top picks as a disclosure.
Okay, Lupin remains the top picks, but which are the other ideas that are coming up on the radar, Mr. Bhasin?
Yeah, so Anisha, we talked of shift from unorganized to organized. Such a stock which we are recommending is Parag Milk. I did it previously around that 180, 190. Yesterday it was at 220. Parag Milk came out with superb numbers. It is the second largest cheese player. If I asked you to name 5 cheese players, you would not. You'll find it difficult. Amul, Britannia. The second largest is Go Cheese, which is Parag. Parag is shifted from, what will happen is by 2030, 30 lakh crore type of business comes from cheese and dairy products. Parag, there will be 10 lakh crore which will go to the organized sector, and just 10 or 12 players. Parag derives 70% from value-added business like ghee, cheese and protein. They are the largest supplier of whey protein to even Nestle and Mondelez. Profitability came against a profit of 9 crore last year. They did 35 crore on a turnover of 550 crore. The market cap is just 2,500 crore. And I am not saying, but this is now a value-added product. They have garnered new resources, new people from the top picks from Nestle, Marico, all the top players. Deloitte is their auditor. BCG has done a total transformation for the company, and in a value-added business, which is going to be 70%, they deserve a re-rating or a multiple which is higher. At 2,500 crore market cap, it's the cheapest stock in the market. The first target would be 350, 400, which I think can come in the next 3 to 4 months. But if you're looking for the next 2 years, if you're looking at organized, look, because cheese is now inherently the new millennials, they're eating, their change in attitude of having branded is going to be the driving force. This stock can even be a 500 rupee stock in the next 2 years. So Parag Milk is one of the top picks which I have. And if you go by the numbers, if you go by all the change in scenario of how our eating habits, value-added products, and the likes, I think this is a must-have in your portfolio.
Okay, fair enough. That's interesting looking at Parab Milk. Stay with us, Sanjeev. Lots more stocks that we'll get from you. But in the meantime, it's IGL that's unfazed despite the changes in Delhi's EV policy. That's the word coming in from the managing director of the company, Kishore Chattiwal. He also spoke on the company's acquisition strategy going forward. Let's hear out this conversation with my colleague, Prakash Priyadarshi.
As you know, all the geographical areas, now that after the 12th round, almost 100% area of India is allocated to one entity or the other. And within 5 years, I mean, that 5 years is the time as per the PNGRB regulations, that you can't change hands. So some of the GAs are nearing 5 years. So as and when the opportunity is there, we are definitely open to such acquisitions. And this CNG, PNG is our core portfolio. So that we are anyways open, and we are confident that whichever GA we acquire, we can bring in the technical expertise, the financial strength to expand it at a much rapid pace.
Okay, and before I wrap up this conversation, sir, allow me to ask one question on Delhi government's recently announced EV policy that will have or may have some impact on your overall business. My question to you is there any specific strategy that you are planning to mitigate these losses that may happen going forward?
You see, whatever happened in Delhi, this is a textbook transition that you can say. That prior to CNG, the buses were on diesel, then they were on CNG for 20 to 22 years, and now they are transitioning to electric. So when we say natural gas is a transition fuel, so this is the classic textbook kind of a definition that you can give. So we feel that similar situation, similar transition is going to happen in other GAs. That those buses, the interstate buses that are plying on diesel right now, they will convert to CNG and then to electric. So in that sense, we feel that whatever volumes we lose in Delhi through DTC, that will be made up by interstate bus conversions.
Okay, so that's a commentary coming in from the management of IGL, but clearly oil and gas and the rest of the PSUs have been that one big pack that have seen complete re-rating. Mr. Bhasin, yesterday on the floor of the Parliament as well, we heard the Prime Minister as to what kind of re-rating and value creation these public sector entities have seen. But the big question is it likely to continue at this pace? What's your take? Mr. Bhasin, the question.
It's a very difficult transition in 4 years. 13 lakh crore market cap is 70 lakh crore. Proof of the pudding lies in the eating. If you own the PSUs, only then you are laughing your way to the bank, and which is the case with most mutual funds who have been underweight. Some just shunned them. I'm not saying there are free lunches available now, but I think that still we think there is upside in a lot of stocks, and you can still put your money where your mouth is. Particularly LIC, ONGC, GAIL, SAIL, these are looking very, very attractive in the large cap space.
Kunal, let's get in your take on some of the stocks within the broader universe that fired up. Trent on the charts and Delta Corp up 11%. Kunal, you're on mute. I think we're having a bit of an issue. Naresh, why don't I get in that take from you in the meantime? Trent and Delta Corp?
So Trent was a case of short covering yesterday post the numbers. The stock was actually showing signs of a possible, say, a follow-up sell action if the numbers were not good. And what we've seen is a extra move. So I would expect some bit of a fade off today. So any spike today would actually be the price to book profits. Or if you have a gutsy trade, can actually go short. Yesterday was a huge short covering, 18-20% move out there. So in that case, I would be considering a book profit or a short. In terms of Delta Corp, it continues to remain a stock which is a stock which moves only on the announcement or possibly of a possibility of an announcement. So yesterday there was some buzz in terms of some reprieve coming in from the GST, etc. So in that case, I would still wait it out. I would not be say, trying a hand out here. Wait it out, let a proper announcement come in, and then maybe look at the price action.
Mr. Vaseem, do you look at Cummins or Manappuram closely? Do you have a view on these two names?
Yes, they are both in our portfolio. Manappuram, particularly when it's dipped to that 100 level due to some inquiry on the on their CEO and so on, which was a buying opportunity. Look, Anisha, with the spurt in gold prices, the value of the product for lending has become even more secure. And these people make, the Manappuram and Muthoot make 2% flat. Now, the bargain was at that 100 rupees when you got the market cap, at a very, very optimal level. The stock has more than doubled from there, but it remains one of our best picks. As you are aware, wedding season, the collateral of wealth effect, all that add up. Plus, they've diversified their portfolio away from gold, and they're going into NBFC-like type lending. On Cummins, it's a no-brainer in the sense that when in 35 years have I see L&T, Cummins, Siemens, ABB all rise in tandem, the commentary from Cummins was extremely positive, but the stock is extremely, is not cheap. So at 2400, there is, I would say limited room on the upside, but we own it in our portfolio and we will remain the course. There will be, a little bit of what we call profit taking, but the market is rewarding the capex stocks because that is where the real push lies. And 20 years, you've not had anything to do with capex, particularly on diesel generation and the likes. And that is where Cummins is coming to, rule the roost. It is also part and parcel that in the US, Cummins and CAT are one of the top performing stocks in the index over there.
Okay, stay with us, Sanjeev, and actually thanks so much for taking time out and joining in. Well, let's move on to more news and updates, in particular with OMCs. And while the Red Sea situation has not affected BPCL just yet, the oil major's top boss does not rule out any disruptions going forward. Speaking to ET Now, the chairman of the company, G. Krishnakumar, says that any escalation could result in higher crude prices. He also said that the scope of this will affect the scope of renewable energy. Let's hear out that conversation with Prakash Priyadarshi.
Presently, there is no impact. We are watching it with caution. It can impact in future if the conflicts worsen. Right now, there is nothing is impactful to us.
Okay, and taking into account, will there be a separate strategy in terms of sourcing crude from different parts of the country to meet your demand?
Of course, we, as usual, will be diversifying our sources of crude. We will look for the best possible rates which we can get so that it economically makes sense.
Okay, and so what would be the crude outlook going forward?
We believe it will be range bound because it is depending on multitude of factors. So it will be between 80 to 87, 85. It will be range bound between $80 to $85.
Okay, and
unless the conflicts escalate and all that. Right now, we believe the present condition, crude will be within $80 to $85.
Okay, and my last question would be, sir, on your capex. Since the companies are diversifying its portfolio, especially OMCs, and it's been the government thrust as well to diversify, especially in the areas like renewable, green hydrogen, and so on. So what would be the BPCL's strategy going forward, along with the other developmental work?
We have a 5-year strategy which we have worked out. We see the current country needs a lot of energy for its growing. India is growing, economically it's growing. It's supposed to be 7 trillion economy, and all this needs energy. If you wait for a renewable energy to take you there, it may not be enough. It may take a longer time. So we believe the current traditional fuels will have to be leveraged.
Okay, so that's the commentary coming in from BPCL chairman, but time now to welcome on board Chakri Lokpriya as well. Chakri, hi, good morning. Good to be speaking with you. Let's start with OMCs itself, because when we were talking to a whole host of experts on the budget day as well, there were quite a few people who were positive on OMCs despite the massive run-up that we have seen in the last 3 to 6 months. What's your view on the sector, and if there's any preferred bet in this space?
OMCs as a space, despite the run-up, they still continue to be valuation-wise still very cheap. But what remains, kind of uncertain is in terms of price pass-throughs in case oil rises and there's, because of the Red Sea, etc. If there is a price increase, then who bears the price cut? The price change. is the question. So therefore, I think on the other hand, if you look at companies like Oil India, ONGCs in the same oil pack, they are far better placed because they have the benefit of both downstream and upstream. And I think ONGC and Oil India are looking good rather than the OMCs.
Okay, fair enough. Chakri, let's also get in your take because there have been quite a few companies that have come out with their quarterly numbers, so lots of result reactions. What's the outlook then on something like an Apollo Tyres? The margins have expanded. You've also seen the net profit grow. And for instance, you've also got something like a Fortis, which came out with its quarterly numbers. It was a bit disappointing this quarter.
If you look at auto companies, auto ancillaries, or even earnings in general, earnings have grown overall anywhere between 17 to 19%, which is a very good number, excellent number. And the market itself is trading at probably about 17, 18 times on 26. So the market is not overheated. Now, JK Tyre is a perfect example of, really, really good numbers, but the expectations were high. And therefore, the stock saw some amount of correction. But still, after this correction, the valuation of the stock looks very attractive. And the outlook, because, the raw materials are in control, the demand is reviving, and the margins are expanding. It's like a textbook case of all these 3 or 4 factors which will help the stock to do well from the current levels.
Okay, so that's the take as far as the tire space is concerned, and the and the entire OEM as well as a basket. But shifting focus to consumption as well, Chakri, because we have been talking about how there has been this big dichotomy, rural versus urban India divide, and clearly it's showing in the stock prices as well, whether it's hotel, whether it's other high-end kind of spaces, they are doing well. When do you see that there could be a pickup in the rural plays as well, or is it a right time to buy in and wait for just that?
The rural is weak, and I think it'll probably take its own time. If you look at companies like Britannia, numbers were good, margins expanded, the biscuit demand was fairly strong, which is also consumed in rural. And they had company initiatives which helped the margin, but the valuation is also up there at about 48 times. So the valuations come for the FMCG space reflect. And therefore, the rural spend is not so dramatically going to improve for the stocks to do well. On the other hand, if you look at an Indian hotels or a Lemon Tree or Chalet hotels, they reported really very, very strong numbers. Various aspects of their business, whether it is corporate spending or MICE or consumer spending, individual consumer spending, all of them are very strong. F&B is very strong. And therefore, the revenue growth rate is supporting its valuation. So I think we'll stick with the urban spend like the hotels.
Fair enough. Meantime, how are you looking into the entire euphoria within the PSU space? I know it's a very broad segment, but just owing to the kind of comments that have been coming in from the Prime Minister, the fact that this sector has been in the spotlight all of last year, where is it that you're finding extreme optimism and maybe areas where you feel that there is perhaps too much exuberance?
I'm thankful that, we got it right more than a year ago. But again, to put things in context, if you rewind back, let's say 10 years, there were about 250 odd companies, PSU companies. Number is more or less constant. Market cap has kind of slightly more than doubled. So if you look at it from a longer term context, the market, the individual stocks in the PSU basket are not overheated. Now look at, in the last 1 year, of course, they have gone up multiple times. Many of them have been multi-baggers. Then look at a stock like, for instance, Chittagong Wagon, gone up like 7, 8 times, 10 times maybe last 2, 3 years. The company is still trading at 28 times on its FY26 numbers. Now, 26 times for a company whose earnings is growing really fast is not an expensive multiple on the face of expanding margins. Now, we can expand the story to many of the other stocks in the PSU space. And therefore, I think there are still stocks to look at, but blindly buying PSU stocks at this level won't make one money because of the run-up.
It's not a blind buy. You'll have to do your due diligence properly, both in terms of the valuations as well as fundamental. Hold that thought, gentlemen. But the big event to watch out for today is, of course, the Monetary Policy Committee outcome, which is expected at 10 a.m. But what's the expectation from the street? And apart from the decision on rate, What would be the commentary on Paytm as well as the fintech universe will be important. Let's go across to Ankur to get an understanding of the expectations.
We are standing right outside Reserve Bank of India's building where monetary policy is going to be announced soon. Now all eyes will be there on Governor. What are the steps which is going to be announced by Reserve Bank of India Governor on liquidity situation. Why I am talking about liquidity ahead of policy rates? Because there is a wide anticipation that there may not be much change in policy rates this time as far as economists are concerned. There is a wide anticipation that the policy rate, which is repo rate, is likely to be kept unchanged once again. But as far as liquidity situation is concerned, there is an anticipation that there may be some steps which are announced by the governor. It may be VRR, it may be CRR tool as well, which may be utilized by the governor. So we need to wait and see what are the steps on that front, because banks as well as all the stakeholders are waiting that how Reserve Bank of India actually handles the liquidity situation. Apart from that, there may be some important announcements on Paytm front as well, because we may see Reserve Bank of India governor commenting on the issue. Remember, Reserve Bank of India had put an embargo on Paytm Payments Bank till February 29 where the transactions can happen. So we need to wait and see whether or not there is any update on that front. But all in all, there may be other announcements outside the policy, as it happens in all the policies where Reserve Bank of India comes out with several policy measures. So it may be an interesting policy day once again.
All right, so policy commentary will be way more important than the actions this time around. But there is a very small, section of the market which does believe that there could be some ease coming in on the CRR front, because liquidity time and again have been cited as an issue by the corporates as well as the bankers. Anyway, let's move on and talk about some other stocks. Chakri, fifth consecutive strong quarter, not only a strong quarter, but a beat by Lupin. Do you think further re-rating from here on is possible in Lupin, or bulk of the good news is already in the price?
We've looked at basically the numbers, and the business momentum seems to be pretty much intact, and it looks like the beat can continue to happen for at least the next couple of quarters. Of course, in anticipation, the estimates will move up, but that is the good news, because as estimates move up, the valuation will be on its side. So I think Lupin as a franchise, I think looks good at the current levels.
Okay, so that's about Lupin and kind of, good numbers that the company has been delivering time and again. But Chakri, where do you see the case that one should take, probably look at trimming positions and book profit? Is it real estate? Do you think the peak is behind? Because earnings from a couple of those companies weren't the most impressive.
Yes, earnings were not that great, but in some of the companies, but in the case of their unsold inventory of the various real estate companies is coming down. Still, the overall inventory stands somewhere close to about, I think, 1.5 to 2 years. I'm talking about national averages. So individual companies, obviously, it's different. So against this backdrop, as interest rates peak and in the US start cutting, India will also do so. Most of the rates, home loan rates in India are on floating rate, so which means the cost of borrowing almost immediately comes down. That will provide a further fillip to real estate demand. So I think, yes, we should continue to hold on to real estate stocks and not trim positions yet.
What happened Sobha developers this time around, the numbers were, okay, wait 1 second. There's a big block deal which has happened in Kalyan Jewelers, about 1.5% stake in the block deal window has happened, and the stock is not cheap actually. There was a massive valuation gap between Titan and Kalyan till say 1 year back, but from $100 to almost 330, 340, it's a 3 times gain already. So the valuation gap has closed out there. Kalyan Jewelers, nevertheless, as far as the charts are concerned, Nuresh, you've seen the rise of this stock. Would you advise looking at it or ignore? Nuresh?
Stock has been a one-way rally as such, and the whole pack as such. So at current levels, the risk reward is not great. So I would wait it out, wait for some time and let it pause. From a price of say 100, 120 rupees back in May to June, the stock went up to 390. Now it's making a sideways consolidation between 320 to 390. So unless one has a really long-term view and can keep a stop loss or say have a view, expect another period of 2-3 months of sideways, then one can go for a buy. I expect the stock to be sideways between 320 to 380 for the next couple of months.
The interesting one is Mankind Pharma, wherein 1.62% equity has changed hands, but the promoter had given a heads up that this is to meet the minimum shareholding criteria that they have to kind of meet for the listing norms, and it's not the case that the promoters are offloading or anything. So there's 1.62% equity which has changed hands in multiple block deals as well. So this is an interesting one as well. Ajay, overall pharma has actually been on the radar of a lot of investors and big chunks. You know, even on Aurobindo for a couple of days, there was a very heavy volume that was getting very easily absorbed by the market.
Around 800-ish.
Yeah, at that level.
Yeah, you're right. I mean, that was the first quarter which came in. I remember, the EBITDA performance for Aurobindo, I'm not even going towards that regulatory issue which has just happened, has actually not happened overnight. 3 quarters it took that EBITDA started improving, and the current quarter's numbers are still not out, but the previous one came in a massive 150 crore beat. So with around that, from 700 to 800, there was big volume, you're right. But Mankind, that one has been a massive wealth creator. It was called an expensive IPO to start with. Also pull up the last 1 year graph of Mankind. Chakri, you remember when the IPO came around $900 if I'm not wrong? Everybody called it expensive, and well, the superior growth, the India growth part is well documented in the last 4 quarters, and the stock has doubled. And even now, I hear that this block, which is almost 850 crore thereabout, the book was seeing a lot of interest from funds. Would you buy at current level 2100, or would you sell if you already have participated in the last 1 year gains?
Mankind Pharma has done very well over the last 1 year, and it's continued to execute on its business franchise as well, because its consumer portfolio is very strong, its institutional business is developing, and the margins are improving because of the consumer business which is holding on. Against this backdrop, its market share increases have been evident, and so I think while the stock has doubled, I'd clearly continue to hold on to Mankind Pharma, because the business operating measures momentum is still firing on all cylinders.
Okay, point taken. But let me go across to Kunal and get a sense. What was up with SBI yesterday? That massive 4% surge. Do you expect that rally to continue in SBI, Kunal?
Well, there's a strong possibility that the stock may continue, because yesterday's breakout was quite strong, visible for many of the other PSU banking names also. So of course the tier 2, the tier 3 names, they were doing pretty well for themselves. That doesn't come as an exception that SBI has also managed to give a breakout finally. Now what matters for the stock is the breakout that the stock has seen about 660 mark. This has been a hurdle point for SBI for a prolonged period of time, and there was a strong relative strength analysis study that possibly SBI is one of the underperforming PSU banking names from the large cap lot, whether you have the likes of Bank of Baroda, etc. So I think that underperformance could now start to get covered up for SBI the moment the stock sustains above the 660 level. So I think for a trader who's maybe missed out on the stock price or is looking to buy, I think 660 could be a good threshold point or a support point for the stock. Keeping that as a support, I think even at current levels of 670, 675, SBI I believe could be a very good buy.
Okay, SBI is fine. There's another interesting stock which was starting to see early sparks of interest from the market, and that is Catholic Syrian Bank, CSB. Catholic Syrian Bank has a very very strong management now with Mr. Mondal there. Look at the last 1 year. Chakri, have you had a view on this one, Catholic Syrian or even DCB for that matter, where the Aga Khan group wants to raise their stake now and have sought RBI permission? These two are not very often discussed banks.
Indeed, Ajay, I don't have a real firm view on either of the banks, but Catholic Syrian banks, one, the management has changed. Second, it has been a topic of speculation in the past of, whether it would change hands. Now, I think that speculation is kind of died down. But the business overall outlook in the part of the region where it operates is kind of recovering. The growth rates are still lower versus other parts of the country. So other than that, I don't have a firm handle on either of these two banks.
Okay, point taken. So that's about CSB Bank as well. But just taking stock of some of the other big buzzers which are expected to be in focus today as well on account of earnings. And Tata Consumers, of course, we haven't discussed that much at great length. But the earnings were largely in line with expectation, whether it was top line or the margins. Profitability was a bit of a miss on account of the one-off expenses that they had shown. But overall, after that acquisition that they've made of Capital Foods, the street is expecting that there is that hunger for growth that the management has shown. The other one is Fortis, wherein it was a bit of a subdued set because the margins were pretty much flat and the hospital business revenue growth was also a bit limited, a tad bit lower versus expectation. Nuresh, on the charts of Tata Consumer as well as Fortis, is there anything interesting that is building up?
So Tata Consumer has clearly been the leader in the pack in terms of momentum. The stock has continued in a higher trend. As of now, it's making a flag formation wherein it has a breakout above the 1180 mark, which is also the highs made, which is also the all-time high roughly. So if it sustains above 1180, it should be a fresh breakout, and the best way to trade is to continue to ride on to this. And now stop loss would be closer to 1145. Then going into Fortis, the stock has been a slow and steady uptrend. But if you look at what has happened in the last 2 years for the rest of the healthcare names, they've gone up massively. Fortis, because of the situation where it is, the stock has been a relative underperform, but finally the stock started giving that breakout above the 300, 350 mark, which was a problem for the stock for the last 2 years. And now the trend is set. We hit a new all-time high day before. So now I would expect 420 to be a base and dips to 430 to 440 be a buy.
In terms of earnings today, I think Apollo Hospitals is an interesting one. Biocon will come out with its earnings, and then of course Zomato will be on everyone's radar. Chakri, what's the view on Zomato?
Zomato will kind of show some kind of continued trend towards, trying to improve its profitability. I think the focus here is on a margin. Maybe it's not, a fair thing to ask of this company given its growth path, but the focus will be on margins if it can show some kind of improvement. On the face of overall kind of weak consumer, I think that will kind of still weigh on the stock.
What about V-Mart Retail? You were talking to the management yesterday, V-Mart Retail, Anisha, in the afternoon?
No,
were you there? Not in 12, okay.
But nonetheless, I think the commentary has been quite positive because for the longest time, they were underperforming. That LimeRoad acquisition hadn't turned around, but there were initial signs, I think, in
fact,
quarter.
2 quarters back, the management did guide that Q3 will be when the numbers are likely to start improving. And we saw some improvement coming in. And yesterday, the stock ran up very sharply. Today, it appears that it will open 20 bucks into the green over and above yesterday's. So let's get the commentary going and then we'll discuss. V-Mart, important because it's at the lower end of the K-shaped, economy which we keep talking about. And we've been talking over here that maybe last 2 years, the upper end of the K, which is landmarks of the world, ethos of the world, have done very well. Is the risk-reward ratio now tilting in favor of the lower end of the K, V-Mart? We'll get you the management and then we'll discuss that with Chakri.
We will continue to invest in opening new stores. We will also close down a few stores wherever we sense that there is a loss of profitability or loss of margins in some of these areas. But otherwise, I think on a consistent basis, we should definitely look at around 50 store addition year on year. This year also, we've already opened around 40 odd stores, and next year also, I think we should be looking at least opening 50 odd stores. I think on the margin front, definitely we will want to, ensure that we are able to give the maximum value to the customer. And that's what we are known for. So we are not looking at margin expansion. We are definitely looking at ensuring that we are able to get the footfalls back, get the consumer interest back, and give the maximum value to the customer. So we will be prepared to, even compromise on margins a little bit so that we are able to build on a very sustainable, long-term story.
Okay, so Chakri, tell us, did you catch the commentary coming in and also the results? See, after yesterday's big move too, VMart is gaining 1% today.
Indeed, I think VMart as a space, is strategically well positioned in the tier 2, tier 3, tier 4 kind of a towns where it is expanding market share. There you don't have organized retail like the way VMart does, and VMart does a good job. Their acquisitions, etc., kind of held them back a little bit. Now, if you look at recent spending growth by the consumer, the Indian consumer, you've seen credit on the smaller items, smaller ticket items, actually increasing rather than the big ticket items. I think that is good news for a VMart. And I think, so therefore, I clearly I'd look to start buying into the stock because I think it's on the mend. You won't look for pricing power, but you look for volume increase.
No, Chakri, we let you go, but let's quickly take stock of some of those big buzzers, at least in pre-open. Lupin is expected to open with a big gap up, at least that's the case on my screen. It's showing an uptick of around 8 to 9%. Inox Win, on account of that big 1500 megawatt tie-up that they have done with CSC, is also suggesting it's opening with a gain of around 4 to 5%. Mangalore's, chemical is also in focus on account of that share swap that they have decided with Paradeep Phosphate. So take a look at both of these counters. They are in focus on account of that big deal that has happened. And in terms of other names, let's watch out for Lupin as well as Cummins India. Cummins India is showing a big gap up on my screen. It's showing an uptick of almost 10% if I have it right, and that's because the numbers were really solid. So Paytm, Kalyan Jewelers, on account of that big block deal as well as Power Grid, are in focus. But let's take some mid-cap strategies from our technical experts. Nuresh, you go first.
So that would be a buy on Muthoot Finance. The stock has been retesting that support level of 1350 where it broke out from, went up to almost 1500, 1550 levels. After testing that support for the last almost 2 weeks, the stock yesterday gave a short-term breakout. So expecting this to continue towards the 1550 mark, stop loss at 1400.
Point taken. Kunal, what about you?
I'll go with a buy on Poonawalla Fincorp. That's a stock which I've been bullish on earlier. I think at 490 plus levels, the stock is ripe for a breakout yet again. So the last swing high, the stock has corrected more than 10%. And it looks like that the stock is likely to break past above the previous swing highs, which means 540 could be a decent target for the stock over the near term. Stop loss could be kept at 475.
Charts of Cummins and Manappuram, would you recommend a buy after this gap up open that we are seeing in the pre-open rates? Kunal, the question is for you on Cummins and Manappuram.
Well, not for Cummins, but I think if Manappuram is something which looks attractive, in fact, that's a stock which is forming a flag pattern. So above 190 plus mark where the stock closed yesterday, I think it just closed at the 190 plus mark. I would probably be looking out to buy Manappuram. Cummins, I would probably wait out for maybe another, a bit of a cool off if it happens intraday, because the stock reacting post results, and I'm assuming the volumes would also be quite decent for the stock price. But buy on dips for Cummins, but Manappuram, even at current levels of 193, I think is a very good buy.
Okay, shifting focus and quickly running you through all the headlines across the world. First up, it's the veteran politician Sharad Pawar's party, which has got a new name, the Nationalist Congress Party, Sharad Chandra Pawar. Earlier, the Election Commission had ruled the faction led by his nephew Ajit Pawar as the real NCP, which will be allotted the name and the symbol. The symbol of the new faction is yet to be confirmed. Moving on to what's happening in Pakistan, because it's all set for the general elections today after months of delay. The country has been at the center of political, economic and even judicial drama over the past year. However, ahead of elections, the country has been rocked in by twin blasts in Balochistan. Amid strained ties with India, the IMF has warned that the Maldives might be at the high risk of debt distress amid increasing proximity with China. It has warned that overall fiscal deficit and public debt may elevate if urgent policy adjustments are not made. Meantime, there's no respite from the winter chill in North India. Following a rainy spell, the IMD had predicted that there will be no significant change in the weather conditions across the pockets. Himachal, Punjab, Haryana, Chandigarh as well as Delhi are likely to witness a drop in temperature between 2 to 4 degrees Celsius, while the rainfall is likely to occur during 9th to 11th February near these areas as well.